제가 만든 컨텐츠들은 어디까지나 정보 전달을 위한 영상들이기 때문에 절대 영상만 보시고 주식들을 매도하지 마시기 바라고요. 본인 스스로 반드시 리서치를 더 하신 다음에 판단을 내리시기 바라겠습니다. Hello everyone, I'm very excited today to have Will Wine, the CEO of Granite Shares, on our channel where we will be sharing his insights and experiences of the market. And I'm sure it will be extremely helpful to many investors that are watching this interview, especially in a market like the one we have right now, where a number of individual stocks are flying high. So Will, I really wanted to thank you very much for your time, and it's great to have you on our channel once again.
Thank you, Andrew. Really good to be back on the channel and good to see you.
So I remember that in our previous interview, you mentioned that the market could go higher in 2023. But first of all, were you anticipating that the market to have a new all-time high? And if so, how long do you think this rally might be able to last, in your opinion?
It's slightly unusual in the sense that I think if you'd asked most people, could we be at an all-time high in a market where we have interest rates at the highest level they've been for many, many years? The reason that the market has done so well, in my mind, is because the earnings have been really good. In other words, this market is a market that's been backed up by fundamentals. And you've seen the large tech companies in particular, but earnings across the board being positive, broadly speaking. And this has happened now for the last few quarters. So while companies are meeting or exceeding earnings expectations, this is really what's driving the market higher. Of course, people will point to interest rate or expectations of interest rate cuts this year. And that is important, but we are talking about, I think, a level of interest rate cuts that perhaps are less than people might expect. But certainly, I don't think the market really needs them. That's the bottom line, is that companies seem to be doing well, the consumers hanging in there, and the market's driving higher.
You're saying that you are anticipating the Fed fund rate cut this year, I assume. And the second part that I felt that was interesting is that you think even the Fed fund rate cut will not have much of an impact on the economy, or do you think it's going to run higher, or it doesn't matter that much because it's going up based on the fundamentals?
Yeah. So firstly, I'd be in the camp of everybody thinking that the first rate cut will come in June of this year, and then I think we might get one or two more rate cuts kind of towards the back end of the year, depending on how the economy is going. What I'm saying is that's already priced into the market, and really, one or two rate cuts from where we are is not going to make a massive difference. What will make a big difference to the economy, Andrew, is if people think that rates are dropping materially from here. So in other words, if we're going from, let's say, 5% to 2%, or even below, that makes a big difference in terms of the financing for people, wanting to finance a new mortgage, for example, or any kind of loans. But I think from 5% to 4.5% or something is not going to make a huge difference.
So on the FOMC meetings, they're saying that, as you said, they might be cutting the rates in June, but it will be a very small amount or percent. But do you think that this rally that we're having, since it's not being, dependent on the Fed fund rate that much, do you think this rally that we're seeing is a real, I would say, healthy bull run that's happening for the next decade? Or do you think that we're seeing a bull run and might be seeing a major crash before we see an actual healthy bull rally?
I'm not in the camp of thinking that we're going to see some kind of imminent crash. I think that, we are in a bull market. How long the bull cycle lasts for, who knows? It's impossible to predict. I think that one good sign of the market continuing at least for, the next sort of 1 or 2 years would be a broadening out beyond just the Magnificent Seven or the largest sort of mega cap tech stocks. So look to something like the Russell 2000, which has obviously gone up this year, but not in the same way as the S&P or the NASDAQ. So I think once you see small cap companies or the small cap indexes like the Russell start to appreciate and maybe even outperform the larger indexes such as the S&P or NASDAQ, that's healthy for the market. But I think we need interest rates to come down a little bit more before that really starts to take steam. But for now, the market's healthy. I don't think, when we think about a crash, we have to ask ourselves, what's the catalyst? What would be the catalyst to drive the market into some kind of crash or decline? And it's very difficult to see what that is. We're at full employment from an economic perspective. The consumer's still doing well. GDP is increasing, earnings have been good across the board. So it's difficult for me to really sort of point to, what would be that thing or what areas of the market to cause concern that would drive the market down or force us into some kind of crash scenario.
You just mentioned that you think the bull rally might last 2 or 3 more years. For someone like me who is a retail investor, I've been seeing, Nvidia, SMCI, AMD, TSM, ASML, these stocks like going to the moon. It's rising like crazy. And I personally am a little bit worried about a pullback. I think pullback will make me feel comfortable. But as you were saying, do you think that even if there is a pullback, you still think that these stocks might go higher and higher as the market keeps going up another couple or 3 years?
The question is, do you believe that Nvidia as an enterprise will be a bigger, more valuable company in, say, 5 years' time or even 10 years' time than it is today? And if the answer to that question is yes, then buying Nvidia today clearly is something you should consider. Now, as we know, typically the path, for any market or any stock is not just all the way up. There are peaks and troughs along the way. And if you get a pullback in Nvidia right now, or in the next 6 months, that very well could be healthy and allows people to get in at a lower price or buy more at a slightly lower price. But again, the key consideration is not the price today. It's, do you think that Nvidia is going to be a more valuable company in X amount of years' time? If you call a bubble scenario, the converse is true, right? It has to be the case that this company is going to be worth a lot less in 5 years' time or 10 years' time. And I don't think that's the case for Nvidia. And I think there's a lot of companies in the market that right now sort of fall into that category where the growth is still good, even if you're not an AI company.
It's the vibe that we're seeing right now with the AI related stocks going high like 10 times in a very short amount of time. Is that something that you have felt during the dot-com bubble, or is it kind of different from that time period?
It's different because of one major reason, that the dot-com bubble, remember, was in part, and there's obviously a lot of different aspects to it, but was in part a new technology, but also a new way to value companies. And companies I'm talking about with zero revenue or zero profitability and just effectively a business model built around the prospect of the internet. The difference between 2000 and today is that today we actually have the vast majority of wealth in the stock market in very real companies, i.e. companies that have, $1 trillion plus of market cap, that are super profitable, have growing revenues, and have very secure business models or even quasi-monopolistic business models. So that's just very different from the pets.com days and some of the more infamous highlights of the tech bubble, where you were really betting on a dream, which clearly turned into a nightmare.
In a market like this where it's been rallying a lot, personally, are you invested in the market and taking gains following the trend, or do you have a large portion in cash waiting for other great opportunities?
For me, I'm probably 9 times out of 10 almost always fully invested. And my reason for that is fairly straightforward, in that I tend to, just in terms of my own personal money, not really worry about market timing that much, and probably take a lot longer view than the majority of people. And again, I'll go back to the simple question, like, do you believe the market will be higher in 5 years or 10 years? And if the answer to that is yes, then you should be invested. But I'm not somebody that sits around with a massive amount of cash just sort of trying to time the market. You probably learned a long time ago that you'll never get that decision right. And the best thing you can do is just to be invested. And at worst, if you're really worried about picking that time, is to try and average into the market over time, a period of time that you're comfortable with.
I think that would help a lot of people that are listening to this video. But I think we gone through a lot of topics here, and I think a lot of people, those were the questions that a lot of people might have had. But thank you very much for addressing those questions, and it was really helpful for me as well. So again, well, thank you very much for your time. I think this was really helpful for me and also for my audience. And I would love to have you on again as a guest on our channel.
Perfect.
Second half of I guess this year to see how the market goes.
Great. Andrew, great to see you. Thank you so much for your time as always and for inviting me back on your show. And yeah, look forward to talking with you as the year progresses, and we'll see what happens.
All right. Thank you very much.
Take care. Thank you.
조금이라도 도움이 되셨다면 주위 분들과 나눠주셨으면 너무 고맙겠고요. 구독과 라이크를 해주시면 더욱 감사하겠습니다.